Hey, this is Austin Doty. I'm here to share with you my analysis on the global indices and other related markets. So, as you're well aware, the markets have been selling off for about a week now, and a lot of people have been asking me, hey, is the sell-off over? Is it safe to get back in? So I figured, hey, I'll make a video and then I could just share it with everyone. So right now what we're looking at is the S&P futures. I use the futures because it's traded 23 hours a day. It shows the overnight bounce, and you don't miss things like you do with the cash market. So as we can see, we have traded down into the 200-day moving average, but I believe that this bounce we're seeing right now over the last 2 days is going to fail the highs, and we will see additional downside. Okay, and now I'm going to show you why I think that. So we can go over here and look at the Nikkei, and we can see that in general, world indices are relatively correlated. So let's take a look at the S&P 500 and compare it to the Nikkei, and you can see that, hey, these markets are pretty well correlated. They bottom and top at roughly the same time. So we can delete the S&P 500 now, and we'll focus on analyzing the Nikkei. And so what we're looking for in the Nikkei has already broken the June low, where the S&P 500 has not yet. So this is the June low, and we'll look over here. This is the December 2018 low. So these are two lows that we want to look at. But so we'll go back to the S&P 500 quickly, and you can see that, hey, it hasn't taken out this low, but most likely it will. And you can see how far we are above the December 2018 lows. That's because the S&P is a lot more bullish than the Nikkei is. So we'll go back to the Nikkei here, and we'll take a look. This is roughly the pattern that we are looking for, and this is a typical correction that you'll see in an index, and that is an ABC pattern, okay? And so you can see how well that sort of matches the scenario that we have going on right now. So how do you get the targets for the C wave, which we are in right now? Well, one way is what I have laid out here first with these blue lines, is that in general, the A wave is equal to the C wave. So if you do that, then you will end up with the target roughly around this 19,655 area. Okay. Another way to do it is to use 161.8%, the golden ratio of the B wave. And if we do that, then we end up with the lower end of this range, which is 19,280 or so. And the easier way to do this, but possibly less visual, is if we draw it out with the fib extension tool. So we can draw it out, and we'll see that this 1 is the equality, which I've drawn with the blue lines, and then a lower end of the range, 1.236, gives you somewhere around that 19,140, 19,200 area. Bottom line is we shouldn't break this December low, okay? And so another market that we can also look at for clues is crude oil, okay? And so crude oil right now is very well correlated with the S&P, and we'll chuck the S&P up here, and you can take a look at the two. So you can see that, so the S&P is here in this goldish color, that they peak and bottom at roughly the same time. The magnitude is different, but the days of the high and low are typically similar. So this is October of 2018. You can see that crude oil got demolished while the S&P declined modestly by comparison, but still pretty significant. So you can see that they bottomed late December, both of them. They rallied together. Okay, so we will delete crude oil, and we'll look at the we will delete the S&P 500, and we'll look at crude oil and apply a similar type of analysis, and we can see that crude oil most likely needs to reach somewhere around this $44-45 area. Okay, so, and we can we'll again use the same tools to come up with targets for this market, and we can see that there is a good confluence around this $44 area, right? And so again, same lows in this market. This is June of this year, which crude oil, I believe, just broke it today. And this is the December of 2018 lows. So I'm not sure if crude actually broke it. It should be very close, but it should break it here in the next couple days. So right now we are seeing a bounce, so we could see crude oil bounce back towards a $52 area, but it is definitely a bounce to fade. And we have one more factor here that can give you a little bit of an edge in this market. And so in general, markets follow self-similar repeating patterns, and we call those fractals. So what I've done is found a fractal from an older period of time which matches the current scenario very well, and we can see, hey, that this is sort of what I'm describing. So right now we are in a bounce in the S&P, so we'll move him out of the way right now. Right now we're in a bounce in the S&P, and that bounce should reach about 29.30 or 29.40 either tomorrow or tomorrow's Thursday, so either tomorrow or Friday, and then following that we should see a decline, and that is when crude oil will be on its way to this $44 area. The Nikkei will be on its way down towards this 19,600 area, and yeah, that's what I expect. So I have one more fractal here we can look at, which will give you a rough idea of what we're expecting right now. You can see this would be a bit more of a shallow C wave where we would only reach the 2660 area, 2680. So this is possible, and also this is a pretty nice match, which will give you closer to the 2500 area. Bottom line is I'm expecting more downside, and if you wanted to do it in terms of retracements, you can get an idea too. 618 retracement here is pretty close to the 2600 handle, and I wouldn't rule that out at all by the S&P 500. So we're expecting a move roughly to come somewhere down here. Okay, and so we can do the same logic with A equal to C, and if we do that, get something like this. That was backwards, so here you go. Roughly like this. So 2672 is 50%, and possibly A equals C. We don't know yet because the B wave is still in progress. It could also be slightly extended, and you see move down here. But when you do get down there, I do like going long. So this is overall a dip to buy, and watch for this market to trade into this area of somewhere between 2660 to 2590, 2600, and that should happen by the end of August. But I don't see a reason to be long this market until very late in August, or possibly early in September, when crude oil is down here and the Nikkei is down here. Then I like going long. That's it.